For more on the global markets and what could lie ahead when markets open in China in the next couple of hours, let's talk to Saruhan Hatipoglu. He's the CEO of an international company that specializes in risk analysis. Saruhan, welcome.
Thank you.
So let me begin what we saw in U.S. markets today. There was so much hope after that opening bell that this rally would continue throughout the day. That did not happen, dropped more than 200 points. Why?
Yes, something happened at exactly 3 p.m. See, everything was going well. It was about 400 points, 350 to 400, and then everything changed by 3 o'clock. And the reason for that is, I think, it was selling the gains. The investors do not have confidence in the market. They wanted to count the gains and then sell it. It's sometimes called capitulation selling, to get the profit out and wait for another day to see what's going to happen in China and other markets. And if the Chinese market opens very low, just like it did yesterday, I think we'll have another volatile day tomorrow in the stock market.
So what do you think is going to happen when the Chinese stock market opens in about 2 hours from now? What are we going to see?
Well, it's very hard to say. I wish I knew. That would be great.
Oh, come on. You have a crystal ball. You can predict these things.
So what will happen, I think, is that, first of all, the interest rate cuts will help in the beginning. There's confidence in the market, I think. And they also reduced reserve requirement, which is a sign that foreign capital is leaving. That's what China does. They reduced reserve requirements, so more liquidity is available to the market. But also, Chinese stock market is not that responsive to interest rate cuts. We go back to June and see what happened. That was not sustainable either. So it all comes down to the Chinese investors. Are they confident in the market? Are they confident in the government's ability to help the market if there is need? If they don't feel that, and by the way, without boring you, I'll say this, Chinese stocks are trading 60 times reported earnings. That's 3 times more than S&P. So S&P 500. There is a lot more valuation cut we're going to see. I think it's not going to happen tomorrow necessarily, but 5 to 10% more to the downside because of overvaluation in the market.
And let me follow up on that. China's volatile stock market doesn't necessarily reflect the country's economic conditions, does it? Isn't that an accurate assessment?
It's a very accurate assessment. Actually, if you look at history, equity performance and economic performance are not related at all. A little correlation, let's say, a little bit, but not too much as people are making it to be.
I mean, as far as the GDP, the employment, the fundamentals, China would argue it's still very strong.
Correct. China is slowing down, and it is healthy. Last year, I told some of our clients that if China grew 8% this year, or about 8%, I would ask them to leave China because that's not sustainable. The economy is trying to move from one based on investment to consumption, and any kind of transition, big transition like this, requires some type of a slowdown, and that's what we're seeing in China. And would the equity, I don't want to use the word crash, but correction, hit the consumption? We don't know that yet. We're going to watch and see in the next 6 months or so, but in the past, it hasn't happened. But this decline is more pronounced than the ones before.
So there are some who panic on days like this, who worry about their investment. Then you have others who say, let's not panic at all. And what you said, that this is more of a correction. Who does one believe?
Well, if you watch the Dow and the American market today, I think panic won, right? Because if people were on the other side, we're saying, okay, we're in the correction territory now, let's pick the winners here. And despite the bad performance, by the way, Apple, Netflix, Facebook, these stocks did well. So investors are seeing some of this good picks, but overall, just like a rising tide lifts all boats, the opposite is true as well. So it all comes down to what the investor is. They're going to watch China today, and I think they're going to be affected more about what happens in China today than yesterday, because when China contracted, U.S. futures were up 300, 400 yesterday.
And I got to ask you about interest rates in this country. A lot of speculation the Feds were going to raise interest rates in September. Do you think that will still happen? Is that a possibility?
As an economist, or from an economist financial perspective, they should increase the interest rate. There is a lot of overvaluation. And the reason that we're seeing the stock market moving away from the economic performance, which, by the way, is quite okay in the U.S., it's good recovery. But in the past 5, 6 years, because interest rates were almost zero, investors were borrowing free money and putting it on the stock market. Therefore, the value of the stock market has detached itself from the intrinsic value of the real economy. Now, that gap is narrowing down. So yes, I think before the end of this year, maybe not in September, but December, I think Fed should raise interest rates. Are they going to? It's becoming less and less likely with each passing day.
Especially with the kind of stock market we've been seeing. All right.
Absolutely.
Thank you so much, Saruhan Hatipoglu. I think I got your name right.
You did.
All right, great. Thank you very much.